If undefined risk is your thing, then we got you covered, because today's cherry bomb trade is another undefined naked short put, but this time in LUV, or Southwest Airlines, which has 4 stars of liquidity and a weak positive correlation to the SPY. Today's trade has a high probability of success in return for that risk that you're taking. So if that sounds interesting to you, stay tuned, because we're going to build out that trade. Hi everybody, Neil here again with Option Theory. Thanks so much for joining us. If you're new here, because this stuff is timely, you want to head down to that description below. There's a link to sign up for the Tasty Trade email list for cherry bombs. You'll get these trades emailed to your inbox, and you can trade along with us, or you can just watch these videos too. But we recommend you sign up for Tasty Trade's email blast because they have some great content. They have some thoughts that I don't put into these videos, so you should subscribe to that too. All right, so what we do here is we build out a portfolio of cherry bomb trades inside of ThinkOrSwim. So we encourage you to join us and let's get to building that trade, right? So let's head over to the Analyze tab and go to Add Simulated Trade. We're going to be in the September weeklies, which as of today, August 6th, 2020, is 43 days to expiration. I have all strikes open, and we're going to be selling a short put here, right? We're going to be short a put. We're going to be at the 27.50 strike. So if you left click on the bid for that 27.50, I'm selling 1 contract. Yours might say 10. I follow the Tasty Trade mechanics, right, of trading small. In this case, 1 contract is fine for me. So at most, we'd be risking $2,750 minus the credit we received. But look at the bid ask on this one. So, right, let's shoot for a mid-ish price of 74 cents. You can adjust yours accordingly if you feel that you want to be a little lower, a little higher. All right, so with that, now that we've built the trade, see, it wasn't all that hard. We move over and understand our probabilities of profit and our risks, right? So even though we kind of covered the risk already, let's head over to that risk profile. We can see here, the first thing you want to do is set this calendar here to the expiration date, which is the 19th, 18th, right? That closes on the Friday, but 19th is actual expiration. So anyway, you can see that date here in case you're wondering. So I'm going to hit the 19th, and there we are. Now we want this price slice to be right at break even at expiration, but rather than dragging it there and guessing, you hit this menu, choose set slices to break even, and set it to that expiration. Now we can see we're looking at an better than 80% probability of us breaking even or ending up on this line or to the right, and that's good. Now, that doesn't mean it can't end up here, right? There's an even better chance it's going to test our patience. What is that probability, right? So heading back to this table here, we can see our delta is close to that 16, which matches that Tasty Trade approach of selling a 16 delta short option. In this case, double that, which is 34. There's a 34% chance that LUV is going to give us some heartburn and test this line. Now, okay, we know we could lose about $2,700 if in the next 38, what was it, 38, 40, 42, I don't remember, hang on, 43 days to expiration. All right, we could, if Southwest Airlines goes out of business in those amount of days, then we're on the hook for that, $2,700. And now you might say $74 worth of profit, of which we're looking to take about half of that. Is it worth that risk? And if it isn't, you don't have to trade this, right? Nobody's forcing you to. There are other ways you can do this. You can do verticals. Now, this is a $2.50 wide strikes. So you'd be looking to collect at least about 80 cents to get about a third of the width, right? Now, that might be something you can achieve. It might not. But remember, you're going to give up your probability of profit, and you're going to give up, well, definitely losing your probability of profit. You could get over the 80 cents, but you're going to move closer to the at the money, so you're going to reduce your probabilities. So it's a trade-off, right? All right, so with that, we understand our probabilities. We know our max loss and our max risk, but max reward. Let's see that again before we send it. Let's right-click this, choose Confirm and Send. Everything we just said here is right there, max profit. Shoot to take this off at about, what do we say, 37, right? That would be the profit we're looking to take. So I'm going to hit send. That's going to put it over into my working orders. And at this point, it's easiest if you wanted to set yourself an alert, right? that point. Say when it gets to 37 cents of value, then you want to get an alert saying time to take that trade off. That's a good idea. I like that. All right, I think I actually did a video on that, how to set those profit target alerts. So hopefully I'll put a card up there. You'll see that sliding across, and you can watch how to do that. All right, everybody. If you've made it this far, I appreciate you. I'm looking at you. Thank you so much for making it to this point in the video. If you haven't already, would you consider hitting that like button, right? And then tapping that subscribe button and ringing the bell. This stuff is relatively time sensitive because we're dealing with options and they have time value, right? And we often put that to work in our favor. So that would help you and help me. All right, everybody. Thanks so much for making it this far. I will see you in tomorrow's final cherry bomb of the week. Happy trading.